A massive Bitcoin warning straight from ARD with Bitcoin Professor Co-Pierre Georg is really heating up now. We're definitely not letting this go uncommented, because there's some serious hate being thrown at Bitcoin here. They're saying that Bitcoin is not a store of value. Bitcoin is completely manipulated. The ECB would be a democratically legitimized institution. They're even warning about a potential crash. An absolute disaster. And a whole lot of other things, speculations, blah blah blah. We won't beat around the bush. It's crazy what's happening here, that the media still has to go so hard against Bitcoin. We see the agitation from the interviewer, who is already framing the whole thing as if Bitcoin is really, really bad. So this is about the recent price drops, and how bad Bitcoin is now, and that it's just really, really risky, that you definitely shouldn't throw any money into Bitcoin and so on. Check it out. And maybe just a quick disclaimer here, Professor Co-Pierre Georg is of course funded by the Ripple Foundation. That means he's getting funds from the foundation, which we now know for sure. Smear campaigns against Bitcoin are underway. He is now the new director at the Blockchain School of Financial Supervision in Frankfurt. And now check out this massive report.
Overall, there's a pretty tense atmosphere, a strained vibe because of the geopolitical situation. There's a tense atmosphere in the Bitcoin community as well. After the rally in the fall, when Bitcoin climbed over $100,000, there's now a sense of disillusionment. Bitcoin has dropped significantly, down to $80,000 last week. Despite all the wounds being licked, or perhaps precisely because of them, the PR machine surrounding Bitcoin continues. Slogans of perseverance are being spread and high price targets are being announced. And some folks might be tempted to invest in Bitcoin. After all, should you really play along or not? I'm asking the Bitcoin professor, or better said, the blockchain professor from the Frankfurt School, Professor Co-Pierre Georg. Good morning. It's great to have you here.
Before we even dive into the interview, I just want to point out that the host is already framing things against Bitcoin. You can clearly see here that this isn't neutral reporting. They're already talking about gambling and so on. So they're not asking neutrally here, like, what's this all about? Instead, Bitcoin is already being framed in a very clear way. It's been framed in a certain way, but now it's really getting started.
Yeah, the Bitcoin supporters are very clear. The future is in Bitcoin. Can you share this view?
I'm definitely more skeptical about that. Since Bitcoin was invented, we've had various narratives about what Bitcoin is for. It started with the idea that it would be the currency of the future. Then, at some point, it was supposed to be the store of value for the future. Not much of that is left. It's not like Bitcoin has established itself as a means of payment. It's slow, it's energy intensive, and it's expensive to pay with Bitcoin. There are a few niche applications, but it's a long way from being mainstream. As a store of value, it hasn't really proven itself well. Right now, we're looking at gold. It works very well as a safe haven asset. Bitcoin has proven itself despite the geopolitical tensions, despite the deregulation. In the USA, after the election, it hasn't really established itself.
So, I don't know if this was supposed to be a comedy piece, but there's just so much bullshit being thrown around in such a short time. So starting with this, we'll go through everything now, step by step. So here it's being said that Bitcoin isn't a good store of value. I just pulled up the Bitcoin chart here. Check this out. Here's the Bitcoin chart. Here we see that since 2021, when Bitcoin was still under $10,000, it has now made a massive rally upwards. Of course, there was a bear market in between, and there have been ups and downs along the way. But we're looking at it long term. Bitcoin is only going up here. And when Co-Pierre, the Bitcoin professor, the high Bitcoin professor, says that Bitcoin hasn't proven itself as a store of value, that's just factually wrong. You can find the facts here. You can see for yourself. Google the Bitcoin chart and take a look at the returns. Even when we look at it on an annual basis, it's not that bad. So we're up 30%. I mean, for Bitcoin standards, it's not that huge, but 30% compared to something like the MSCI World or a typical stock investment is actually really, really good. What the copier is doing here is also a trick that all the lefties use. They just make the time frame so small. They choose such a short time frame that they can just say, yeah, okay, Bitcoin hasn't performed well in the last 3 weeks, or in the last 2 months, and so on. Of course, but that's also nonsense if you only look at an investment on a 1 or 2 month basis, or on a weekly or daily basis. I always tell you to look at the big picture in the long run. I really wonder what he's teaching at the blockchain school, because this should be something everyone can understand. When you invest, when you put your money into something, you have to take a long-term approach. Then he says here, Bitcoin is too energy intensive, too slow, too expensive for payments, and so on. That's all nonsense. The energy intensity, that's a whole different topic and so on. But we can already see that Bitcoin is now one of the greenest networks in the world. Bitcoin miners also have an incentive to use excess energy for Bitcoin mining, meaning they use CO2 neutral energy or energy that produces very little CO2. The story about it being too slow isn't true either, and saying the Lightning Network is too expensive isn't true either. But let's see what else he has to say, because the real bombshells are still to come.
What's left is a speculative instrument, and so far, that's how it's been working. But the crew keeps going to the well until it breaks. And these risks that we're currently seeing that are emerging, I think you really have to look at them with a clear.
So he's assuming that the jug is going to break here, meaning there's going to be a massive crash or Bitcoin might even collapse, as I understand it. So he's clearly warning people here, don't get into Bitcoin. On the other hand, if you go with euros, easy peasy, no problem at all. If you go with dollars, it's no problem at all. That's always the twisted part. They say Bitcoin is really, really bad, but they don't offer any better alternatives. They just say, yeah, okay, just put it in a savings account. And you're definitely going to get hit by inflation.
Yeah. Also extreme drops. So just from that, you can see the extreme speculation that's involved. 30% down since that peak last fall. That's quite significant. How often will this bubble burst, or has it already burst now? A lot of speculators are asking that too.
Yeah, bubbles usually burst once. This model only works to a limited extent with Bitcoin because there have already been 5 price crashes of 80% or more. That wasn't the case with tulips, and it wasn't the case with other bubbles. That is, the model that I believe fits Bitcoin better is that of a small, deregulated, and therefore vulnerable to external manipulation in the market, which could be subject to this manipulation. And that makes it much easier to explain these rapid price jumps and changes than with the usual bubble model. The risks are still there, though. Whether it manifests in a bubble or in a price crash, that it's based on a systemic or systematic risk.
Now the supporters are saying this market can't be manipulated, but they say the opposite.
The market isn't particularly big when you compare it to gold. Gold is 8 to 10 times larger than the market overall. The daily volume of gold is 5 to 10 times higher. The market isn't well regulated like we're used to seeing in stock markets or bond markets. That means the participants in these markets aren't the same. They interact with each other on regular financial markets.
He really wants to sell you on the idea that investment advice for Bitcoin is different from that on traditional financial markets. But he forgets that now BlackRock, all the big asset managers, we have the largest hedge fund managers in the world, Paul, Tudor Jones, Ray Dalio, and so on, all of them bullish on Bitcoin, and here the blockchain Bitcoin professor is telling you no. These are just the speculators involved with Bitcoin, but now it's about to get a lot crazier.
For example, before the announcement of the strategic reserve by Donald Trump, we saw that whales, people with very large Bitcoin holdings, had taken a 50x leveraged position. They got in just before and made over $6 million in profit within hours. So these signs of insider trading definitely exist in any normal regulated financial market. They would immediately step in and take a close look at it. We don't see that with coins, so this risk of manipulation is quite significant.
You can see exactly how it is here in the USA. All these politicians are making political decisions just to make their trades. So there's manipulation happening everywhere, not just with Bitcoin. It's going on in other financial markets too. The whole of Wall Street is, as Michael Saylor says, a rigged game, meaning you really have no chance of competing against Wall Street. I thought that was shady too with the 50x loan position. I've talked about that in videos too, but you really have to put it in perspective. So it's not like the regular financial markets are all that great. And as if, yeah, you're going to protect us with financial oversight bullshit. You're not protecting us at all. It's always about bailing out the big hedge funds and so on, because that's just how it always is in normal finance. But if some small guy gets burned, then that's okay. But if a hedge fund gets burned and so on, then they just, let's say, put a stop to it. Then the stock trading gets suspended. Or when some systemically important companies are in trouble, then stock trading gets suspended and so on. You saw it with GameStop and how the system acted against the people. So they wanted to trigger a short squeeze, and then the stock trading would get suspended. I think there was one day when trading was suspended like 6 or 7 times, or something like that. You could also ask if it's not manipulation when they just suspend stock trading and so on. Sets. The co-chair would probably say, yeah, this is for the protection of investment advice. And that's good for investment advice. and so on. But when a private investor gets burned, the stock market doesn't get halted. That only happens when some hedge funds get burned and then short squeezes are triggered. And when the hedge funds are facing billions in losses, then we get the bailout packages again, and it's all about being systemically important for the greater good, and so on. We've also seen all the financial crises. What happened in 2008 was nothing but a big scam. First, the rating agencies messed up a ton. They were playing around with the ratings, and then it all blew up. And then there were the bailout packages, and the taxpayer or the average Joe had to foot the bill again. That means profits are privatized while all the losses are socialized, and so on. So the fraud is already embedded in the system. Or take a look at the central banks. Feel free to drop a comment below about who thinks that central banks are not a scam, or on the flip side, who believes that central banks are a huge scam. Please leave your comments below. So this is a scam from start to finish, where only a very few people get to decide on monetary policy. And everyone else is basically left holding the bag because they're dependent on this. By some 3 central banks or 4 or 5 central banks that can manipulate interest rates at will, they can impose massive inflation on people through the Cantillon effect. And here, it's basically a systematic robbery. They can address the purchasing power, and all of this is systematically legitimized. There was once a saying, if 1 or 2 people commit fraud, they'll end up in prison. But when the whole state does it, when the entire system does it, then it's democratically legitimized.
They're really pushing young people hard to get into this market because they might miss out on something. So, from their perspective, they need to issue a serious warning because others are making money off this.
I find it highly questionable to sell this, especially to young people, as the investment of the future. It is. There's definitely a clear risk you're taking, and it's not comparable to the risk of trading stocks.
Bitcoin has no CEO, Bitcoin has no issuer, and there's no government you have to trust. Bitcoin, there's no foundation you have to trust. Bitcoin, there's no Ripple, there's no professor you have to trust. There's no leader, there's no organization behind it. So the professor sees the risk here. That's exactly the issue with Bitcoin. Bitcoin is decentralized, not a centralized technology, but a decentralized one that can't just be easily destroyed. Bitcoin has no third-party risk. So where does that exist? Every ETF, every stock. Every company has a CEO somewhere. There's always some third-party risk involved. Even with real estate, you have location risk and so on. Bitcoin, where do you want to attack it? If you want to, what do you want? There's no main headquarters where you could throw a bomb in, or something like that. There's no CEO who can make bad decisions. So it's very clear here. False information is being conveyed here. The biggest risk right now is not having Bitcoin, especially when you have overreaching governments that censor and want to get their hands on your wealth, central banks planning digital euros, and a lot more.
If I were to give young people a tip on how to invest for their future, I would always say diversify. Make sure that you set up a portfolio that's well diversified so that you can balance out the risks that can come up in individual asset classes. Bitcoin is a huge concentration risk.
What has always worked very, very well in the past, for example, was when some professor or some central bank advised you not to buy Bitcoin, it was far too risky, and so on. It was always a good time to buy Bitcoin. By the way, if you want to buy Bitcoin, I'll put a link down below for you. 21 Bitcoin. You can easily, safely, and simply buy Bitcoin. Okay, I admit it, that pitch was really sneaky. But here, with the code Bitcoin Hotel, you can still get up to 20% off the fees when buying Bitcoin. But from my side, this is not investment advice. Here, the copier says, investment advice, tip for you, diversify. I'm just giving you information here. This is not investment advice from me, and I'm saying that openly. You do with your money what you think is right. You don't do with your money what I tell you or what I recommend. That's also what he's spreading wrong. Here. So most of the Bitcoin or many like crypto influencers or Bitcoin influencers or look at blockchain or something, he always just says, hey, I'll just give you the information, but what you do with that knowledge is your business. And the QPR, he just twists everything around and says, yeah, they're all being lured into Bitcoin now, and so on. What comes to mind right now is the pension system. You're not even asked if you want to contribute or not. You just have to contribute to the system, whether you like it or not. So that's the next big Ponzi scheme. And the pension systems are then forced to buy government bonds from states and so on. So that's already a twisted game. And then someone really wants to say that some Bitcoin influencers are luring people into Bitcoin, when the whole system is, that's what it's all about, pulling people into the fiat system and keeping them stuck in it. I mean, you can't pay your taxes in Bitcoin either. You're forced to pay your taxes in euros, in dollars. It's nothing but a coercive system. There's no free currency competition. There's no free currency market or anything like that. It's all a system. It's based on coercion, cleverness, and deception. And if there's a solution here, if there's a lifeboat here, then the blockchain professor comes in and says, yeah, folks, but watch out because all these Bitcoin influencers are pulling you in. Watch out. In a system of voluntary participation, and the system that's forced upon you, of course, no one criticizes that.
The ones we've seen, they've worked 2 or 3 times, but that just highlights the risks that exist in the market. Keyword MicroStrategy, not less, but rather more. I learned during the financial crisis while I was getting my PhD that systemic risk builds up slowly during calm times and then manifests very quickly during a crisis.
By the way, he's talking about the collapse of the dollar, about the collapse of the euro. These are systemic risks that no one talks about, all the financial markets, the real estate markets, which are massively inflated because our money doesn't work anymore, and people are storing their value in real estate, and so on. So he's describing it correctly, but he's applying it to the wrong example. Because what he doesn't understand here is that Bitcoin isn't the bubble. Bitcoin is the needle that pops the bubble of other asset bubbles. Bitcoin is the black hole that sucks capital back out of all the asset bubbles.
That's exactly what I think we need to pass on to young people. These risks don't just disappear just because we've seen the price go up a few times.
One argument is that Bitcoin can't be infinitely duplicated. And on the other hand, you see that many states have to go into debt, so they're also printing money, so to speak. The supporters, the Bitcoin advocates use that as an argument, saying, yeah, with Bitcoin, you're on the safe side. What do you say to that?
I would say the opposite. If you look at the inflation in the Eurozone since the introduction of the euro, it's been an average of about 2% per year. That's exactly the goal that the European Central Bank has set. We got it. Does that have to do with a democratically legitimized institution?
Please write down in the comments who among you voted for the ECB. Who among you voted for Christine Lagarde, who, by the way, is a convicted criminal. And then we'll answer the question again, whether this is really a democratically legitimized institution. And even if the ECB adheres to a 2% inflation target, 2% inflation is still there. And on top of that, he didn't mention that the inflation numbers are rigged from start to finish. So there's a lot of trickery and manipulation going on. They're not using the expansion of the money supply, but rather a basket of goods that gets partially filled with deflationary items, and a lot more. But that would blow up the video.
Both the ECB and the Bundesbank, which were ultimately tasked by the sovereign to ensure price stability, because with Bitcoin, that doesn't exist.
What the hell is he talking about? What, price stability, please? I mean, the price stability, that money is constantly inflating. If we take a look, if you bought Bitcoin 10 years ago, you could probably buy almost a whole house with that Bitcoin now. Not quite, but almost. But if you had 1,000,000 10 years ago, if you had put euros or so in your savings account, you can barely afford anything with that now. And that's the really sneaky part. Here, they're talking about price stability, but price stability, as defined, means expropriation. And that's the really sneaky part. And we really need to get to the heart of this and bring it to light here. And stuff like this needs to make it into the mainstream. And that's why a big thumbs up to everyone who supports the channel, to everyone who subscribes, to anyone involved with Bitcoin, who supports the Bitcoin network, who runs a foundation, and so on. Because it cannot be that such false information is given out by ways. We would have price stability here and a democratically legitimized ECB, which is great. And it's so great for us, even without the whole ECB. That would be really, really bad. No, it's exactly the opposite. Bitcoin is the tool of freedom here, and the ECB is a very questionable institution.
We're tasked with ensuring price stability. That doesn't exist with Bitcoin. That's not democratically legitimized by anyone, but
anyone can voluntarily choose to participate in Bitcoin or just not participate. With the euro and the dollar, you can't voluntarily decide to participate because it's just forced currency. They are a corrupt bunch, and you have to support this corrupt bunch. If you don't pay your taxes in euros or something like that, people will come and beat you with a club. And you end up in jail. There's a big difference between relying on voluntary participation or coercion.
this is the technology of a small elite who invested early on. And now they're trying to convince everyone to follow suit. Because that's obviously the best possible outcome for the early investors.
Yeah, man, we all belong to the Bitcoin elite. That's pumping the price up. Make sure to put a like button down below if you also belong to the Bitcoin elite. That's a really strong statement here. But it's also not true that only a very, very few people benefit. It's actually the other way around. Only a very, very few people benefit from central banking, the so-called billionaires. And with Bitcoin, everyone benefits whether you join in 10 years, 100 years, or 5 years because there's no Cantillon effect. There's no redistribution through money creation because Bitcoin is limited. Just check it out.
There are also claims, or the argument, that money is made with Bitcoin through Ponzi and pyramid schemes, meaning that people are being taken advantage of. What do you advise young people? What should they pay attention to when it comes to advertising various Bitcoin products?
First and foremost, it's clear to check who is doing the advertising. So, is this a cryptocurrency exchange that's somehow certified, or is it just some entity based overseas? Because you have a completely different level of protection. In general, I would still advise young people to be very careful with the investments they're making. That's highly speculative. There's no guarantee that the price will keep going up. The environment should actually be favorable for Bitcoin. What we've mainly seen is volatility. For a typical risk-averse person, those are clear red flags. That should go up, and you should advise people to take their money and invest it in education or a diversified portfolio instead. You're definitely better off with that than with this huge lump of risk.
Professor Co-Pierre Georg from...
So I'm going to give you a tip. The professors are intrinsically worthless. If professors give you investment tips, then run out, do your own research, look at the facts yourself, and compare what any professors are telling you with the actual facts. Because a false narrative is often spread here, and false facts are thrown around. Bitcoin is also an attack against the status quo, against the fiat elite, and so on. And there are just people who defend this massively. And that also includes a lot of professors, a lot of elite people. I'm stunned. For everyone who's out and about in the DACH region, I have a big recommendation. From the 24th until the 27th. In April 2025, the biggest, fattest, and craziest Bitcoin conference is happening here in Switzerland. The Bitcoin Swiss Conference. There are some major players involved here. Sonny Degree, Mark Friedrich, and many others. My mom will also be there. I was there last year, and it was really amazing. So definitely check it out if you want to get informed about Bitcoin, if you really want solid knowledge. Not some one-sided reporting, but genuine, well-rounded Bitcoin knowledge. With the code Bitcoin Hotel, you even get a 5% discount. And if you pay with Bitcoin, you get another 10% off, so that's already 15% off. This is an absolute must-attend event here from the 24th until the 27th. April, use the code Bitcoin Hotel. Unfortunately, I'm not there because I'm here, busy in El Salvador to collect and eat papayas and trade bananas, and so on. So unfortunately, I can't be there. I just saw that Miko Judge is also going to be there. Please let me know in the comments what you think about the very solid knowledge of the professor here. You can totally get on board with this. You can say, yeah, the professor knows his stuff. I can absolutely back that up. Or do you say, no, I'd rather be critical. See you, take care. Peace out.